What's going on, guys, and welcome back to another video. So with it being Wednesday, we're going to be doing an update on my goals and objectives that I set out on Monday's video. So if you haven't seen Monday's video, here is the 3 goals and objectives that we set out. Firstly, it was to get my small positions started in the 11 new holdings that we added in last week. Second of all, we wanted a dollar cost average in my existing holdings that were over 3% in the red. And my third goal or objective was non-investing related, and it was to get to 500 subscribers on YouTube, and on Monday we were on 484. Let's quickly start off with the third goal objective, and that was to get to 500 subscribers on YouTube. We are currently 5 away from that goal, and we are on 495. So as always, guys, if you're new around here, please consider subscribing to the channel, as it really helps both me and the channel out going forward. The next goal that we will discuss is filling the 11 holdings that we've added in last week. So as discussed on Monday's video, I just wanted to put in a very small position into each of these 11 companies just to kind of get the ball rolling as such and kind of gauge where the stock price is going from there. And as long-term investing is all about patience and getting stocks at the best possible price by dollar cost averaging, I think patience is certainly key here. So by starting off with a small position in each of these 11 companies gives me the opportunity to keep some capital on the side to go into my third goal that we will discuss later on, which is dollar cost averaging on some of my already current holdings. So we deposited €110 and we put that evenly among the new positions. So we put it into Boeing, FedEx, Verizon, Netflix, Target, Beyond Meat, Walmart, Abbott Laboratories, Stryker, and IBM all received €10. Again, that's a tiny amount of money per share. Like for example here for Stryker, we got 0.05 of a share. But again, patience is key, and we'll be slowly building up these positions over the next weeks, months, and even years. I then had a small few euro laying about left in the account that I had to use. So we deposited that into dollar cost averaging. Again, you can see the amounts here are very small, like they're only €1 each, and some cases €2. But because my positions at the time were only €10 in these small companies, so that's another 10% into each of these. So in the grand scheme of things, it's adding 10% into these companies that were already down a good few percent. So dollar cost averaging there as well. So they were American Waterworks, Consolidated Edison, Next Era Energy, Brookfield Infrastructure. We then put €2 into Essex Property Trust, American Tower, and Well Tower. And again, I just want to emphasize that I know these amounts are quite small, but again, when you're adding in €100 here and there, it really does add up in the long term. So now overall, we are currently at about €5,100 or so. We're up 7.85% or €370. As most of my subscribers would be either in the UK, the US, or mainland Europe. Overall, so we have €5,096. This equates to about 6,160 USD and about £4,584. In terms of my overall 12 sector portfolios, as we always give a full breakdown every Friday, we'll just give an overall brief synopsis of each right now. So communication services is up 11.5%, consumer discretionary is up 9.5%, consumer staples is up 2.93%, energy is up 14.6%, ETF is up 9.9%, financials is nearly 12% in the green, healthcare is nearly 6% in the green, industrials is up just under 5.5%, materials is down 9.9%, and that's mainly due to my biggest position in there in the form of Barrick Gold. So we'll discuss that later on in the video in terms of dollar cost averaging. Real estate is down 1.29%. Tech, my largest holding, which I have over €1,100 invested, is currently up 9.3%. And my utility sector pie, again, we'll discuss dollar cost averaging here as well, is currently down 3.28%. So just a quick recap on where we are so far. We are currently 5 subscribers away from reaching our 500 subscriber goal. We have now added in a small position into each of my 11 new holdings, and the final goal that we need to achieve this week is to help improve dollar cost averaging in some of positions that are under 3% in the red. So firstly, let's have a quick look through to see if there's any. So we are fine in communication services, Consumer discretionary, I'll keep an eye on McDonald's, as that's certainly a blue chip company, so any chance I get to dollar cost averaging companies like that, I'll certainly be doing so. Consumer staples, we are fine. And again, it's worth mentioning, one of the main reasons besides diversification why I hold so many companies is because dollar cost averaging. So for example, if I just held, let's say, Coca-Cola and PepsiCo here, Coke is up 4% and PepsiCo is up nearly 7%. So if they were my only two holdings, it would be very rare where they'd actually drop back into the red over the long term. So I wouldn't really be able to improve my dollar cost averaging. Hence, every time I bought into these two companies, I'll be increasing my average price, which over the long term means I'll be getting less of a profit. So that is one of the main reasons why I have so many companies. I think I have about 50 or so at this stage. And that's mainly because I'll always, or nearly all the time, have opportunities to dollar cost average some shape or form across my portfolio. Again, reducing my average cost, which again in the long term will make all the difference in the amount of profit we make. Also, energy sector is all in the green. Same with ETF. My financials, we are currently all in the green also. Healthcare, we have two in the red, but one is down 2% and the other is down 0.8. So we're not touching those, as I want to kind of set up a rule not to dollar cost average unless a company drops below 3%. Industrials, we have one here in the form of FedEx. And again, one of the reasons, again, you'll see that some of my new positions might be in the red is because I haven't had the opportunity yet to dollar cost average in any of those. So as that's quite a small position as of now, we might start focusing on some of my larger holdings that might be in the red. So materials, you can see here, for example, Barrick Gold, we have €160 invested and it's down 12.9%. It was down 17 or 18% last week. And again, that's got to do with kind of two main factors. First, the corruption claims against the company, and second of all, the drop in the price of gold. And again, as the markets are certainly cyclical, gold prices rise and fall all the time, just like every other stock. So it's very important to capitalize when companies drop below a certain threshold. And in this case, because Barrick Gold is down quite a large amount, I'll certainly be taking advantage of this. And again, it's kind of worth emphasizing here that you don't just take a shot in the dark. If a company goes down 13 to 15%, for example, you shouldn't just dive right in and start dollar cost averaging. You really need to look into the company to see has there been any major fundamental changes in that company that cause such a dip. We then have real estate. Again, all 5 of these are in the red, mainly because we only just started into each of these positions. So for example, here we can see that Welltower is down 3.65% and Essex Property Trust is down 4.7%. And as these are small holdings as such, let's say if I had €100 or more to invest, I'd probably be putting that into Barrick Gold, as that's a large position, so my dollar cost averaging would be more effective there. But certainly, we'll keep an eye on these type of companies as well down the line. But I also noted in prior videos that I want to kind of keep my utilities, real estate, and one or two others such as materials, sector pies down to a small fraction of my overall capital, as I want to keep the majority of my overall investment money into tech sector, ETFs, financial healthcare, consumer discretionary, etc. So certainly utilities and others alike will be taking a back seat. So we have my tech sector here, and all 4 of in the green, and we have the 5th one, IBM, that we just added in as well, is down 2.4%. And again, as we just added this in, I'll give it some time to settle in before we dollar cost average there. And finally, as mentioned, my utility sector pie, all in the red. But again, we just added all of these companies in last week, so I'm not really too concerned there one bit. So we can see here that Next Air is down 4%, Brookfield Infrastructure is down 5.45%, and American Waterworks is down 3.45%. So we'll have a look of my overall portfolio at the end of this week when I'm actually dollar cost averaging. So I'm going to make out a list of, let's say, the top 5 companies that are underperforming, and I'll do a bit more due diligence and research into those, and then make up my decision on what companies we're going to further invest in to increase my dollar cost averaging. With all that being said, that kind of brings it into today's video. I just wanted to give a brief update in the middle of the week of where we're standing on this week's goals and objectives. So firstly, we have now invested into each of the 11 new holdings, so that goal is complete. In terms of dollar cost averaging, we discussed companies that I want to invest further in at the end of this week to improve my dollar cost averaging, and they are companies that are over 3% in the red, so that is my threshold, so we'll certainly take advantage of my blue chip companies there. And the third goal was to get to 500 subscribers, and we're currently just 5 away from that. So with all that being said, that's the end of the video. Thanks so much if you made it this far, and I will see you all in tomorrow's video.